Hello everyone, how's it going? In today's video, we're going to talk about NIO. So trading under ticker symbol NIO. It's an EV company and it's a considerable EV player in the field. And of course, if you're watching this video, let's be honest, you know what it is. You just want to know how's it going, where it's going to, and what are like the more profound reasons behind the price actions. So the initial appeal of NIO as a company is because it was an EV company back in 2020, well, even before, but the point is its interest really began to have a strong momentum back in 2020. People really began to talk about it around 2020 and especially in 2021. It was considered for a very long time as a significant Tesla alternative. It was viewed as such, and of course, it was lucky. It was lucky to catch the 2020 phase of the bullish period before entering into the current one. So the current situation is the stock price, just like much of the market, and especially the growth stocks or the startups, are in a major deflation or correction phase. Investors are generally speaking uncertain about what the future has for us, and if anything that it has can be good, right? If there's any new hope existing. Of course, there will always be hope existing. And then, like, for example, if I look at the market right now, it's far more appealing to me than where it was a year ago. But it doesn't mean that I want to jump in now. I'm just saying that there's still hope out there. And this hope is getting bigger and bigger as the days go ahead. The market in general considers NIO as an interesting company in a good market or very interesting market with deep potentials, but it's also contemplating. So what I'm saying by this is that yes, they're fully aware that NIO is a company with decent opportunities. It's in a good market with a lot of demand, mechanically speaking, just because there are a lot of consumers potentially. But at the same time, everyone is also aware that the environment might get harder and harder as things go forward. So in the short term, is it possible that NIO has bottomed? From a price action perspective, yes. I don't think that NIO wants to go lower than its current like mid-10 level, I would say. In the long term, it's really hard to say if it deserves to have your holdings, if it deserves to have a spot in your portfolio over the next 5 to 10 years. Because here's the thing. Us as traders, we are essentially hoping that assets that we buy, either shares or bonds or whatever, they will gain in value as time goes on. So it's not just a question of if the company is decent. It's also a question of where is this share traded at? So, for example, if this company is traded in the United States, it's going to have a certain valuation model after it. If the stock is traded elsewhere, it might not have the same kind of clout. So, if I take another example, and this time in a completely different industry, when Aramco went public, they initially also wanted to come to the US. And then, when they saw the requirements, they also wanted to go to the FTSE. And then finally, they stayed at home in the Saudi exchange. So, even though it's worth around 2 trillions, I think it's in the trillions of Saudi riyals, it's safe to say that the valuation would be different. But of course, we're talking about the same company here. So it doesn't mean that the company itself has any issues or additional issues if traded in one place or another. It simply means that people in different markets have different kinds of definition of what is a decent valuation. And it is often said that in the US, people tend to be very generous with the valuations, like the formula at which you multiply the company's equity or its enterprise value and so on. to give yourself like a market cap of where it should be. In this sense, the US market is one of the most generous, if not the most generous. If it goes to other markets, for example, Singapore, Hong Kong, or the FTSE, it's possible that, people are going to be like, you know what, I'm not sure that this company is worth X billions or like tens of billions times a number. So in this sense, I think that we have to contemplate this possibility seriously. Of course, there will also be regulatory challenges coming from the SEC and other watchdogs. And in this case, we have companies that ended up being delisted because of this ongoing struggle. So the last time I really talked about NIO, I think it was a very long time ago. And back then, I said that we should be careful about that possibility of delisting because it is real. It's not zero, and it's not in a marginal percentage. It's unlikely, but there's a heck of a difference between something that's almost impossible and just unlikely. And I would say that if NIO is traded in different markets, we will have to brace ourselves for a different kind of valuation model, which may, depending on where you bought the stock at, may cause significant losses for your position. So its key factor to success, of course, is delivery numbers, quarter after quarter after quarter. It also has a few other factors that don't necessarily have to do with the business itself. For example, are the numbers reliable, right? Are the auditors reliable? And we've just talked about like the auditory issues, so a bit of that, right? We don't want to be in a situation like the investors of Luckin Coffee. And also, something else. I don't think that so far the market has looked seriously enough into the potentials of fuel cell technologies and its impact that could be had on the automobile market. We've also not really looked deep into consequences of rare earth excavation, right? I don't think that the market as a whole, us, the investors, and any other stakeholders have looked deep within these issues. So, is the hype of EV something that's set in the long term? Or is that just like a bridge from the combustion engines burning oil to engines burning hydrogen? We haven't really looked at the whole thing yet. And I think that going forward, we do have to start talking about these issues a bit more if we're serious about investing into EV. Because we talked about hydrogen, right? Hydrogen at the end of the day is fuel cell. Fuel cell technology already powers cars in certain parts of the world. So for example, in Pakistan, there are plenty of cars powered by a sort of like big natural gas reserve in their trunk. Is it very convenient? Not really. Could it be dangerous? Yes. But is it being used? Is it being adapted? Yes. And is it possible to think that once hydrogen technology matures, which could happen within the next decade or 2 decades, is it possible that this technology will continue to fuel our expectation of how this industry should conduct itself? And speaking of the rare earth, there are also like supply chain issues or logistics, as well as who owns the rare earth mineral deposits that are in play. So if the technology matures to the point that we can use hydrogen as a new fuel, then this is going to disrupt this entire industry once again. I mean, of course, either way, you don't have to worry that much about those possibilities, because here's the other thing. The current price action has already priced in many of those uncertainties. Maybe not as much the hydrogen, as I just mentioned before, but it doesn't mean that they're not thinking about it. It doesn't mean that they're not worrying about maybe the party could be over anytime soon, as soon as the music ends, right? Maybe Elon did something really stupid, and then that caused the Tesla stock to plummet, which may cause like an avalanche effect on other EV stocks. So this is a real possibility that we have to contemplate if we want to invest in companies like NIO and NIO itself. So what is priced in is the uncertainty. This is going to continue to exist, if not to increase its existence, its presence. It's probably going to grind a bit higher in the short term, and it does have to answer some existential questions for the long term if it wants us to stay in for the long haul. Like, for example, can it parry the consequences of switching from one stock market to another? Can it justify its numbers, or can it really back up the reliability of its financial data going forward? What are its answers regarding the excavation methods of rare earth, and also the comparative advantages against using hydrogen? So those are the issues that companies like NIO and NIO itself would have to answer if it wants to stay relevant for the long term. For the short term and the medium term, I would say that just by the looks of the price action, if you want to buy in, now is a good entry point. But think hard about whether you want to hold it for the long term, for the reasons that I've just listed above. And regarding how much you want to buy it for, I would say that as low as possible. And the total exposure for NIO, in my opinion, should be a serious position, but dollar average down over a relatively long period of time. So it should be from 3 to 5% of your portfolio at max, and over the next 12 to 24 months. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings, which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect the investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks, with the expectation that they will be loaned to businesses. Normally that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up, or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, Capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, when it comes to the price trends of the market, degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.